What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William. And as you can see, my face is now officially on camera. For all of those that have been asking, I have finally made your guys' request come true, as they say. But before we begin, let's get into some formalities. As always, please know and understand nothing that is discussed on the channel is financial advice. It is simply financial education that I then hope to provide people so that they can understand. You don't have to slave in 9 to 5s if you don't want to. You can easily hustle 24/7 in the stock market and still accomplish all those financial goals and dreams you have for yourself. As with anything else in life, you're always going to get out whatever you choose to put in, right? But it all starts with you at the end of the day. So let's go ahead and get into it. As you guys can see today in the market, we did have a very, very green day. Aside from having essentially some more COVID scares, I don't know if you guys maybe caught the news or caught the media this morning, but there was a lot of talk about 2,600 flights getting canceled across different cities across the U.S., right? Again, due to COVID and shortages or staffing shortages, a lot of flights did get canceled. That literally is what I turned on this morning when I turned on the TV at like 4:30 or financial news at 4:30 in the morning, while I was looking up the futures and seeing that they were mixed, essentially green and red. Essentially, that initially got my attention because obviously I anticipated a red day today. So to see a green day at the end of it is a little bit surprising, but again, as with anything or anytime the media does talk about COVID or Omicron specifically, you tend to see the days following that either mixed bag days or essentially heavy red days, right? One common trend that I have found specifically when the media tends to lean that way is that the market rotates essentially from heavy tech side specifically into consumer cyclicals, right? So that's part of the reason why I'm making this video, because there was a couple finds that I found in consumer cyclicals that I want to talk about specifically. One I've actually already made a DD video on, which is DraftKings specifically. So I'll go ahead and pull up the chart so you guys can see. DraftKings, I made the video right around the start of football season, so around the September area. In anticipation, I at that time anticipated the market pushing DraftKings to the top side with more states legalizing betting, right? That was my expectation with the start of football season. I figured, okay, well, this is going to be a good catalyst. More betting, more wagering. NFL is a very popular sport, obviously, and a lot of people do like to wager on it. I tend to know a lot of people that like to wager on NFL games. They call it a degenerate sport. I think it makes it just that much more interesting, right? I myself do partake in that, but again, that's neither here or there. The point of the video was, when I made it initially, I thought from the 64-48 channel we were in, we would tend to push to the top side. We were leaning more toward this 48 leveling out, as you guys can see in the chart, right? We were essentially accumulating here, so I figured this accumulation would be to set a floor for our next leg up. Obviously, the market had other opinions and other choices, and it made the exact opposite of what I thought it would initially do. Since then, as you guys can see, it's fallen down to today's low of 28.20. We actually had a 4.21% down day today. Keynote to point out, these options specifically for DraftKings are stupid cheap. And when I mean stupid cheap, they are stupid cheap, right? Like, you couldn't get any more cheaper options, to be honest, when it comes to a major player like DraftKings. But there was a catalyst that I heard of, or I saw, that got my attention, number one, which sent me to go looking. And then when I went looking, there was a lot of interesting trades that I found specifically today that I want to talk about, and I want to bring to your guys' attention because I don't really see anybody talking about it, and I don't understand why, right? Like, I get it. Right now, it's kind of hard to call out a play specifically because you don't really know what it's going to do in this market, right? We go from green day to red day to green day to red day to green day, right? You don't really know what is happening, as I had mentioned in my other video. Like, it's really hard to essentially make DD videos right now on companies speculating on their opportunity and potential, especially when you don't know what the market wants, right? Like, it really does seem like the market, you're just kind of putting money one day here, and then the next day they move it to somewhere else, right? And you're just chasing the high, as they say, right? But in either case, let's get into the important piece of the video, right? So what informed me? So there was this article that dropped at 1:15 p.m., right? But I had heard about it over the weekend that Ohio had officially legalized sports betting, right? Well, Ohio by population is one of the top biggest states, I guess, for sports betting specifically. So much so that it is speculated to generate up to $12 billion in annual wagers and $900 million in gaming revenue at maturity, which could be hit in the state's full third year, right? So it's a lot of money and a lot of cheddar, as you can imagine, specifically for casinos, number one, but also sports betting, right? Because a lot of the sports betting is tied to casinos. Specifically, a few that stand out from this article was Penn National, who actually has 2 casinos and 3 racinos. I'm assuming that's horse racing casinos, right? I'm not 100% sure, so don't quote me on that. You might want to do your own DD on racinos. I've never heard of that word until today, so I'm putting 2 and 2 together, right? Simple logic. But also Caesars owns Eldorado Downs Racino, which is the company's access online sports betting market. The market also launched Caesars Sportsbook in the state and could open a retail sportsbook as well. The other being DraftKings, which will have access to Ohio's market via Penn National and Hollywood Casino Toledo, right? So those 3 tickers are the ones that caught my attention when I went looking in my favorite tool, Unusual Whales. What I found was pretty interesting, right? So obviously, as I said from the start of the video, anytime that the media is talking about Omicron or COVID or anything related to that, what tends to happen in the market the days following is we get red days or mixed days, right? We also get a rotation from heavy tech into consumer cyclicals, right? Something more staple, right? Something that the market feels to be or deemed to be safe at that point, right? So when I went looking into the hot chains, right, I went into consumer cyclicals, right, and I started looking, right. Obviously, DraftKings automatically stood out to me. So then at that point, I went into my intraday analysis, went ahead and pulled DKNG, and wanted to see just what's going on. Obviously, what stands out when as soon as you turn to this page, you see the biggest option trades here. You see a bunch of sold puts, but look at the sold puts in the 50s, right? Specifically, pretty much all except 2 trades were bullish for 50 plus. Well, remember, I just said we're trading at 28.20. That's almost a double up, right? And in a pretty short amount of time, if you look at it, April, that's essentially 90 days out. Call it 100, right? Just to be fair, since we're still technically in December, we haven't started January, but essentially under 100 days, that's a double up. That's a lot of movement in a stock to make in a short term, especially when you've seen that the trend is essentially the opposite direction, right? It wants to push away from the 50s. Now, all of a sudden, you're getting these trades in the upper channel, which is where I anticipated we would set a floor and climb from back when I made the DD video for DraftKings, right? Back in September, around the start of football season. So 50 would put us into that middle channel from 64 to 48. But when you went looking into the chain, right, obviously the most important thing that I look for, as I mentioned from the previous video I made, is most active chains, right? I try to tend to look for now stocks that have common hits, right? Quick hits specifically, close to my strike price, which I understand can be within range or within logic or reason, right, of a potential opportunity to achieve that, right? So specifically what stood out right away, right? You have DraftKings December 31st for 30, right? It's $2 away. December 31st, 29, again, $1 away. Or January 7th, $30, again, 2. January 7th, 32, so that's a $4 swing. December 31st, 28, that's right within range. December 31st, 34, so that's a $6 range, right? And then you see January 21st, $40, right? So those are a couple that are within range, right, of specifically being able to hit. When you go into the highest open interest increases, automatically you see the January 21st stands out, and you see a put for December 31st. If you go by percentage, again, you see the same thing. What I like to see now is this bar chart down here, which is just another view of open interest versus volume, right, specifically. But what do you see right away? You see that the 30 has the highest amount of volume. That's a $2 upside, which again, if you're playing an option, that's money right there. That's a potential to make a $2 upside based on delta. That's profit, right? That's money that you can make in the bank, right? But when you go looking a little further, number one, I didn't see this either. I might have missed it, but DraftKings and the NFL did agree to an NFT launch, which again, NFTs are pretty popular nowadays. So with Steph Curry doing a lot of things in NFT, right? It's another catalyst, I guess you can add to the pile of things that I feel are bullish. When you look at the price target increases, right, you see Wells Fargo went from 41 to 58. You see Goldman Sachs went from 63 to 66. There was one neutral. Union Gaming initiates DraftKings with a hold at 36 price target. Again, that's upside for us. Another bank went from 42 to 42.50, not a lot. Benchmark adjustments from 50 to 70, right? UBS went from 44 to 64. Again, that's back where we were in early September. Oppenheimer goes from 70 to 80. So you see a bunch of upside, right, in the price targets. So when you go looking into the flow specifically, and now you're digging a little deeper, right? Obviously, you see that I have set presets of $25,000 premium. Bid, ask, calls, puts turned on. The only thing I did was change the date to expiration to 28 days max, right? I want to see short-term trades to see what the movement of the stock will be short-term with the catalyst of Ohio, with the catalyst of the NFL and the NFTs. Obviously, those are really bullish signs. Plus, with the catalyst of the price target adjustments, right? I want to see like what the market is thinking in a short-term consensus. When you go looking at this, right, we use the quick view button first, right, to see like what the quick view of the ticker is. Well, when you go looking in here specifically, just take a look at today, right? December 27, 2021, bullish premium by brackets, right? So 5,000 premium plus 61% bullish, 15,000 plus 63% bullish, 30,000 plus 64% bullish, 200,000 plus almost 70% bullish premium, right? So that's going into bullish sentiment plays, right? Whether it's a sold put or a bought call, it is bullish, meaning that they see upside, right? Which again, as a trader, that should tell you, okay, so short term, within 28 days of expiration, specifically just based on today alone, the sentiment is that this ticker will go up from where it is today. Well, that's pretty good because we're essentially sitting at a floor at 28.20, right? The floor being 27.62, we're literally sitting on the floor, right? Where the play could go from. When you go looking into the breakdowns, you see that December 31st, we're sitting at essentially 65% bullish premium versus 34% bearish premium, right? So when you go looking at this, right, and digging that way from that perspective, now all of a sudden you see and understand, okay, so there's a lot of bullish sentiment in the short term, but there's also a lot of bullish sentiment in long term, right? And this is kind of how now I've been putting or maneuvering myself into specific plays that I want to trade. As I mentioned, these options are stupid cheap. When you go into the options, right, if you go, for example, the January 7th, 2022, just to get a better theta delta ratio, you can see that you can get into some of these plays for under $100. So let's say we wanted to play almost at the money at $29. You're talking a call essentially under $100 with your delta at 0.42 with a theta of 0.06. So you lose $6 a day and you make 42 for every dollar that DraftKings goes up. So that's a pretty good trade-off in my opinion, right? That's what? That's almost an 8 to 1, 9 to 1, 8 to 1, 9 to 1, 7 to, let's call it 7 to 1, 7 to 1 ratio, right? Which is, in my opinion, that's a pretty good setup for anyone wanting to get into options. If you wanted to go a little bit out, you could play these 30s, and these 30s you're going to still be essentially right at 5 to 1 when it comes delta to theta ratio, right? But that's not all. When you go looking at specifically some of these trades and you shorten this date to expiration and go down to 14, obviously, now you see what I specifically saw coming through to my now specialized list in unusual wells. Look at these sold puts, right? So sold put $44, December 31st, expiration. Sold put $53, December 31st. That's this Friday. Sold put $38, December 31st. Sold put $53, December 31st. And this is not for pennies. You're talking $108,000, $29,000, $54,000, $53,000, $52,000. As you can see, it is a series of very, very bullish trades, specifically ending this Friday, right? It's a lot of money to throw at a play, to just throw it into the abyss and piss it away, right? Obviously, institutions aren't going to do that, as they have clients that they have to represent for and specifically produce returns for in most of these cases to kind of put out some of this money into an investment. So that was really, really bullish sentiment that I saw specifically. I sent this out to my text group right away that I would be entering trades for DraftKings for this Friday and for next Friday's expiration at the money or a little bit out of the money specifically. So like the 29, the 30, the 31 are things you can look at. And as I said, for under $100, you can get into some of these trades. And from my perspective, having specifically essentially 60% bullish premium or 65% bullish premium versus 34 bearish, that's a pretty good trade-off I'm willing to take on any kind of option play that I'm willing to play nowadays, specifically in this market, right? Again, Ohio legalizing sports betting, the price target increases, those are all really bullish signs that I feel will go and push or help DraftKings essentially push the ticker up potentially in price. Now again, if you want to know a little bit more about DraftKings, there is a DD video. You can go through my video log and find the DD video for DraftKings. Check that out as well. Again, please do your own research as always. Don't take anything that I say as fact. Again, I'm just sharing my opinion of things that I find on Unusual Wells, one of my favorite websites to use nowadays as a trader. As always, guys, if you have questions, don't forget or don't hesitate. You can hit me up on Twitter or IG. If you appreciate the content, give me a like or a subscription. And as always, guys, I will catch you in the next one.